In this presentation, we will take a look at multiple choice questions related to financial statement analysis, going through those questions and then practicing test taking skills with them. First question, net sales divided by average accounts receivable is either A, days sales uncollected, B, average accounts receivable ratio, C, current ratio, D, quick ratio, E, accounts receivable turnover ratio. Let's go through this again using the process of elimination. Net sales divided by average accounts receivable. Is that either A, days sales uncollected? So we're talking about sales and accounts receivable. Days sales uncollected, that would be at least something that's in the range. It's dealing with accounts receivable and sales. So I'll keep that one for now. B says the average accounts receivable ratio. So average accounts receivable is sales divided by accounts receivable. And we might think that could be it. I'll keep it for now. C says the current ratio, and that's typically current assets divided by current liabilities, not specific to accounts receivable. So we could probably cross that one out. D is another one that's going to be more general in terms of assets over and liabilities. So it's not specific to a receivable, so we can cross that one out typically, and we're left with E, accounts receivable turnover ratio. Again, that one sounds familiar and it's specific to the receivable, so we could probably keep that one and then drill down further. A, B, and E, what we have so far. Let's go through it again. Net sales divided by average accounts receivable. Is that the days sales uncollected? B, average accounts receivable ratio, or E, accounts receivable turnover ratio. Now, the average accounts receivable ratio is not really, I mean, we have to take an average of the receivables, but that's not typically the item that should be most familiar to us as our type of ratios we're looking into. The day sales uncollected or the accounts receivable turnover being the last two. And of those two, we're looking at the accounts receivable turnover. So the accounts receivable turnover is going to be the final answer. Net sales divided by average accounts receivable. That is E, accounts receivable turnover ratio. Next question. Net sales of $1,300,000, average accounts receivable net of $80,000, and net income of $50,000. Accounts receivable turnover ratio is what? And we have the formats of our answers. You can take a look at the formatting of the answers. Let's jump over to Excel to work this one out. So we're going to put down our data here. We have the sales. Well, I'm going to say net sales. I'm just going to put down sales. It's going to be 1300000. And then they give us the average accounts receivable. So they give us the average. They don't make us calculate the average here. How would we calculate the average? It would be the beginning balance plus the ending balance divided by 2. Where would we get the beginning balance? From the prior year financial statements. But of course, multiple choice questions don't have a lot of room, don't have a lot of numbers. So you're going to have to look and say, oh, are they giving me the average or not for this one? And then consider whether or not you need to calculate the average. So just be aware of that. So they're saying the average accounts receivable net. What does that mean? Net of the allowance for doubtful accounts if there were one. So if we have the allowance method being used, allowance for doubtful accounts would be reducing the accounts receivable. It's going to be an estimate of what would be uncollectible. So we want to take the net of that. It's already being included. So that's going to be the $80,000 and net income of $50,000. So note that accounts receivable, when we're thinking about the turnover, we're comparing the sales. We're thinking about accounts receivable, and that the journal entry with accounts receivable is to debit accounts receivable, credit revenue, sales, income. So these are the two accounts we typically would think would be most related with those two. Net income, bottom line of the income statement, might be something we could get some value from as a ratio analysis, but it's not the one that we typically would think of as being closely related to the receivable. On the balance sheet, receivable; on the income statement, sales. That's the journal entry. So this is going to be added information given just to throw us off in essence. And we just have to be aware that that's going to happen with multiple choice questions because there's only 3 numbers. It might kind of confuse us. We really are going to think, well, there's only 3 numbers. There should be something we need to do with that. But that's not the case. They're oftentimes going to throw in kind of data that's not necessary. So now we're going to divide these out. We're going to say the sales divided by the average, and that's going to give us 16. We may need more decimals, so I'm going to add a couple decimals and see what we come up to. Now we're going to compare that to the answer to consider the formatting of the answer. 16.25, if we go back over here, notice it's at 16.3 we see. So 16.3, if we just have one decimal place, 16.3 would be our answer. So 16.3 seems reasonable. And notice we have the 0.163. No, that's formatted wrong. It's not 0.8. That's not what we got. 16.3%? No, it's not 16.3% because, I mean, it would be, we'd have to move the decimal 2 places to the right and it'd be some ridiculous percent. This is not a percentage, it's a ratio problem, not formatted in the format of a percent. 16.3, so 16.3, whoop, crossed it out. D's the one, not E. So final answer is going to be D.